Hey there guys, thanks for tuning in to another video, and in today's video I thought that I would do an episode just responding to comments. So I get a lot of really good comments on a lot of videos, and some of them I really want to respond to, and I just don't really have the time to respond to all of them. So, you know, for lack of having better ideas for a video today, I thought I would just read through some of the recent comments on videos and try and, yeah, kind of give my response or opinion to some of the better ones. So thanks for tuning in guys, and let's get into the video. Alright, so over here on my YouTube channel, and I'm basically just going to go through the most recent comments, the newest comments, and just go down until we hit, you know, 15 or 20 minutes, and I think that'll probably be enough. So going through the comments, Barry Plum here, good video bro, thank you mate. Next one here from Krypton. This was on my most recent video, Bitcoin and cryptocurrency absolutely pumps, bull run imminent, ? Fundamental analysis. So Krypton said here, I completely agree, you nailed it again. There are people trying to manipulate the price downwards and the supply just dried up. Like you say, some people just won't sell, so the supply dried up. Now they know the price won't go down further, there has to be a reversal. Too many people want to get in while they can. Yeah, so here's the thing, and we're going to get into this in a little bit more detail in another comment a little bit further down, but I'm not actually really one of the people that subscribe to total cryptocurrency market manipulation. Now, whilst I do think there is manipulation that happens to a lesser extent now than what it did a couple of years ago on smaller cap coins with pump and dump groups, I'm not a subscriber to this whole market manipulation theory, and that's why things have gone down. And I'll explain why in a bit more detail. But generally, markets are cyclical. And they're cyclical because, for the most part, it's human beings making decisions. And you know, I know we have algorithmic trading bots and we have a lot of automation now, but it's still human beings setting the constraints and variables for those trading bots. And generally, these are trading bots, right? So they're looking for small margins. They're not making huge one-off decisions for big buys and big sells. For the most part. I mean, I'm sure there probably are outliers out there, there would be a couple, but for the most part, these are bots just trading for very small margin over a long period of time. But we're going to go into more detail around kind of my thesis around manipulation, why I don't really think it's actually a thing, in a comment a little bit further down. So the next comment here from Jeffrey, thanks for your ideas, Bo. Hope this turns into a bull run, recover from major losses last year. Yeah, thanks, Jeff. Yeah, look, kind of the reason why I made that video was to show that, yeah, like, you know, some new money is coming in, but in a greater perspective, we do actually have a lot of recovery left to get back to where we were. So, you know, where today I think it has had a pullback, and this is the interesting thing in my blog that I did the other day, and now that my internet's working, I can actually get it up and show you guys. My blog I did the other day was how to get ready for the next bull run, and in that blog I actually say that the market can go up very quickly, but it can go down very quickly as well. So I kind of just put some things in there for people who are in this crypto market to start considering to get prepared should a next like major bull run happen like we saw in 2017. But I won't go into that in detail. I'll leave a link down in the description if you guys are interested in that. Next one here, full support, thanks. Next one here, I feel like I'm watching an episode of Beavis and Butthead. Or is that Burvis and Bullhead? Good thing you're way better looking. Well, thank you for that. Twice you said bear market when you said bull market. Yep, so I addressed that in my pinned comment. I did. When you're talking live in these videos, your brain sometimes thinks you're saying the right thing, but then you listen back and you're like, oh, I said the wrong thing. You know, it's kind of just talking on the fly. Things like that happen. Next one down, the dump is going to be spectacular. This looks like a bit of spam to me. Thanks again, wonderful. A comment here from Adam. Adam leaves some fantastic comments. Adam, thank you, mate. And by the way, I have checked out your channel briefly. I do want to check it out in more detail in the future. But I love your work. You're doing great, man. And thank you for all the input and comments that you leave on this channel. So Adam says, it's a consistent rise over 6 weeks with a vertical climb. I like it. All other TA and business investment aside, I think this will trigger the FOMO crowd. Ultimately, the new players will be the turning point, just as it's always caused bull runs in the past. It's been a long crypto winter, this could be a brother. So a couple of points here that I agree with on Adam is when he talks about the new players. So the crypto market at the moment is generally, I would say, the only significant new players are coming in are going to be institutions. The FOMO retail crowd has left this market by probably around 90%. 90% of early participants are gone. Now, whether that means that they held their investments or they sold, I think that's kind of by the by. They're gone. They're not interested in crypto anymore. And just about every single metric across the board correlates with that figure. Market cap correlates with that. Views, subscribers, general traffic on the internet, which is a very accurate figure to gauge general interest, is still down by around 90%. So Adam is absolutely right. We do need new players, and I don't think new players are going to come in until this market, until Bitcoin starts getting mass media attention again. And I don't think that's going to happen until it pushes past probably 15, 20K, until we hit all new time highs, and then it'll be this further like what we saw before, and then new people will start getting involved. However, I do think that there's institutions that have not gotten involved yet that have purely just been waiting on the sidelines for proper custody solution. So major institutions, JP Morgan's one, they're now interested in buying crypto. Go figure, Jamie Dimon disparaging it a couple of years ago. But they have said that Barked is going to be basically the only thing they're going to use, because these institutions are so heavily regulated. Now, the effectiveness of that is another argument, but they're so heavily regulated, they're not going to take the risk unless they see a platform that meets their level of risk profile. They're just not going to do it. So I do think that there's new players in terms of institutions that are just waiting until these platforms launch. And then I do think that they're going to start accumulating. I truly do. I just think it's been a waiting game. And that's why a lot of people in this market think that Barked and ETFs, for that matter, are such a big deal, and it could cause a huge rush of money to come in, because there's like this wall of money that's just waiting for these products to be launched for these players to start getting involved. So next one down here by Kaibo. Bo, really disagree with you on the reason for this price volume surge. It's very clear that the Bitcoin market has been wildly manipulated since the opening of CBOE futures, and perhaps even earlier with tether printing. So I'm yet to see, so I appreciate your comment, Kaibo, but I'm yet to see any convincing evidence that this market has been mass manipulated. I'm really have not seen that yet. I think that turning to a product like futures, and I don't even use futures, but I think turning to a product like futures and having something to blame seems to be an easy out to blame the cause of the market pulling back. But the thing is, when you go and look at these charts, guys, the crypto market has done this on several occasions. Many markets do this. The stock market does this every 7 to 10 years. Statistically, it has done for 100 years. Not to the same degree as crypto, but crypto is a nascent asset. It's a nascent asset, and it's also the mechanisms of how it's traded, having limited supplies and having crypto wallets and all the rest of the things, the liquidity, the 24/7 exchanges. That's the thing, these big stock markets, they open from Monday to Friday and they close after business hours. So crypto, the market is so volatile because it's like a global trading. You have different time zones. It's highly complex. It's highly complex. So I really actually don't agree with that. I don't think the market is mass manipulated, and I don't think it's been done. I don't think the futures are a cause of that. Now, next down. None of this activity caused by organic trading from the mass of people. Look at declining volumes in recent weeks. No one really believes thousands of people simultaneously bought Bitcoin at spot on all these exchanges in a 2-hour period, right? Let's just go over and have a look at CoinMarketCap, and this is what's kind of interesting about that part of the comment. Is I actually looked at the global trading volumes in the video that this person actually commented on, and the volumes have been going up for a number of months, not just in a couple of days. Sure, we had a couple of days of big Bitcoin trading volume, but you can see here that the trading volumes back in really, it kind of hit a low in December. At 10 billion, and it's been steadily going up. If you drew a chart, if you drew a line there, it's been increasing significantly ever since. This has not just happened over a 2-day period. This is like fundamental changes in the market psychology of what is going on. So you've had steady increases in trading volume, then you had a huge increase here. Now, what could have caused this? It could have just been one person buying a huge amount. that for whatever reason didn't want to use an OTC desk, placed a massive order on an exchange, then all the other exchanges follow. It drives a bit of FOMO for the existing people in the crypto market. Not many new people would even be aware of this. And then you have a bit of a FOMO pump. But either way, it's brought the market cap up from like, what, 140, 150 billion up to 170 in just a few days. So I don't think this is any indication of some kind of mass manipulation. To me, it just is indicative of how the crypto market works. I've seen this time and time again. And this is just how this market works. It's just a volatile, crazy market, and it's going to take years and years and a lot of institutions and a lot of people using crypto for the volatility to start to relax over time. And then the last piece of the comment here, also just look at the regular BART moves over the past year. I assume that's maybe a technical indicator. It's obvious some large players drive the price where they want it and paint the carts across all exchanges at the exact same time as they see fit to their own end. Still great channel, keep the videos coming. Yeah, thank you. So just addressing that last part here. Look, I don't think looking at a technical indicator is any kind of evidence that there is systematic manipulation happening across all exchanges. I know there's big money involved, but do you know the penalties for manipulating markets, especially by institutions and whales that have enough accumulated Bitcoin? I mean, what other than monetary income, what benefit is there? I mean, sure, they could manipulate the markets, but the price, the penalty for getting caught, it just doesn't make sense to me, especially given how transparent crypto markets are, especially considering we have block analysis as well, where literally investigative blockchain analysts can go and look for irregularities in trading, which is how a lot of the fake trading volume was caught. So something like, I don't know, I think what they said, that 70% of trading volume was fake or something. So even if we're looking at CoinMarketCap and 70% of this is fake, it's still showing an increase. So it doesn't really matter, does it? It's still showing an increase in trading volume. That's all that really matters. The actual number doesn't so much matter. It's the fact that there's an increase. So look, I have to disagree. Like I said again, I don't agree that there's mass manipulation. I just think people turn to that looking for kind of something to blame for what the market has done. But just to kind of reiterate my point, the Wall Street cheat sheet psychology of a market cycle, I'm sure many of you have seen this. There's a reason this chart was produced, and there's a reason this chart is referenced so often. It's because markets and economic psychology are intrinsically linked. So, you know, this chart, it can be applied to just about every single market. It goes through these cycles. And this is literally pretty much one for one what the crypto market has just done and what has done on many previous cycles. It's why I say on this channel, you've got to play the long game. If you're going to get in this, you've got to play the long game. It's just how this market works, and it is tough. It is tough to grind out, but if you play the long game, if you have a long-term time horizon, and if you're strategic in your thinking and portfolio management, you're positioning yourself for a much better outcome. So the next one down here, you're the best Aussie content creator by far, and that's coming from an XRP maxi. So I said, thanks, mate. That's a huge compliment. So thank you, Simon. Good vid, mate. Great way to look at the potential of the market. Still wish I had some more time to accumulate. I guess my point on that, Uncle Chop Chop, would be to look into dollar cost averaging. So if you have the mindset that I do, where crypto is still day one of, you know, 100-year journey, you know, what the prices are doing today, you know, in 5 or 10 years time, if crypto continues the trajectory, you know, you could see massive increases. Now, of course, like I have to say, and I will say, it could go down too, but dollar cost averaging is a way to recover losses by just continually accumulating small amounts over time, just no matter what the price is. So whether that was $10 a week or $50 a week, it's kind of a really easy strategy, and especially if you're going into like an index fund or a portfolio, like I've got on HODLbot, which is up like 40%. It's far outpaced the market because you invest into a basket of coins where one is down but another one is up. So you kind of diversify across coins that have different behaviors. They react at different times in the market. I've been buying portions of Bitcoin Is it too late to buy more, or should I wait? I can't really answer that question for you, but what I will say is my own personal opinion. I'm very bullish on Bitcoin long term. Crazy move. Hope it keeps on moving. Kenya coin. Can is pumping. Go Kenya. So another one here from Adam. This was on my interview with Emmy. G'day, Bo. I was excited to see an interview with you, but disappointed with how short it was. It seemed to stop just as it started. Maybe we're used to the 30 to 60 minute interviews in the crypto space. Not your fault. I just feel Emmy wasted a good opportunity to get more information out of you. Thanks for all you do. Well, thank you, Adam, again for the comment. And yeah, sorry it was so short. I don't really do a whole lot of interviews. The way Emmy does it with her channel, they were just kind of short interviews, and that's just kind of the format that she does it. I guess it was interesting for me to do that kind of interview because I think in a different way when people are asking me questions. Like when I'm doing videos for this YouTube channel, you know, I'm tailoring them for the audience, and I've generally got a pre-planned vision of how the video is going to go and what I'm going to say. So with those kind of interviews, maybe because I'm a little bit more off the cuff, I've just got to dig into different parts of my brain, and maybe the content comes out a little bit different because of that. But I certainly will take up more opportunities where I get the chance. It was a great opportunity for me, and I feel lucky to have been asked to do the interview. But for sure, if I get the opportunity to do more, I will. But I will say that if you haven't seen, I actually did a podcast recently on a podcast called Got Money. It's by Joy Radio in Melbourne, and it's up on their website. I will try and find it. If I find it, I'll put a link down in the description. That goes for about half an hour. That was really good. That was Elizabeth, the host of Joy Money podcast, asked me a bunch of questions about Bitcoin and about crypto, and they're going to get me back on the podcast, I think, every few months. So that was really, really good. Yeah, it's called Got Money, hashtag Got Money. I think it's on iTunes and all the major podcasts and stuff, but I'll put a link to that down in the description below if you're interested. Next one down here from Damon. Looks like EOS is establishing a headquarters in DC. That's huge news. Look, that is interesting. Like I said in a video a little while ago, there's a blockchain caucus in Washington. So given the funding that EOS has behind it, and this is the thing, the projects that raised a lot of money that either sold at the right time when crypto was at its peak are so well funded, they can really do what they want with that money. They can put it where they want. They can, they can incentivize projects to build on them, so they can essentially fund startups to build a D app on their project because they just want to get their protocol out there. They want to get it seen. They want to get it used. And something like setting up a headquarters in DC, maybe to do some lobbying or to meet with to politicians there to promote EOS. I mean, sure. I mean, that's the benefit to a centralized crypto company, I guess. Not that it's a bad thing. I think there's pros and cons. Next comment here. Please make a video on upcoming IEOs. No, I'm not going to do that. Next video, yeah, bro, Litecoin. Yeah, that's interesting. Since I made that video, the coming Litecoin halvening, everything you need to know, I believe I was the first one to do that on YouTube. That was back in January. Litecoin, I think, is up around 400%. Well, basically, I went into the value proposition for Litecoin, given that the supply rate is halvening, the mining reward is halvening, and I think the mining rate, I think that doesn't actually halve for another few months yet, so we could actually see some more price action on Litecoin between now and then. If you haven't checked it out, guys, definitely recommend you go and check out that video. Next comment down here, Bitcoin will be 10 years at average price of 300k. Save this comment. Yeah, bullish long term. I'm definitely bullish long term as well, whether it's going to be 300k or not. I mean, I think it'd be hard to put a price on Bitcoin in 10 years because so much can happen. But what we do know will happen is we'll have this halvening, which happens early next year, and another 2 halvenings. So the supply rate will go from, so it's 12.5 at the moment, it's going to go to 6.25, then it will go to 3.125, and then it will go to 1.5075, I believe. So at that time, I mean, man, Bitcoin is going to be one scarce resource. So its intrinsic value will be through the roof. Someone responded, it is deflationary, so buy Litecoin instead, more room to grow. Bitcoin is more scarce than Litecoin. Litecoin has shorter block confirmation time, so Litecoin actually comes into circulation quicker than Bitcoin does. It would be great to hear your review about Veriblock and Multivac. Don't know anything about those. I wish I bought Bitcoin back in 2013 when I heard about it, and someone's responded, yeah, but you're going to say this again in 2025 about 2019. I would say Matthew has a fair point there. Disappointed Steve. Next one down, MAGA 2020. Yeah, go Trump. Next one down here, 5 reasons not to own Bitcoin. Number 1, fake trading volume. That's definitely not a reason not to own Bitcoin. That's a fault of the exchanges. That has nothing to do with Bitcoin. No team stands behind Bitcoin. Where is Satoshi? That's a positive. That's a huge positive that Bitcoin has gotten to where it is without a team. I don't want, like, I invest in decentralized cryptos and the companies because I've vetted the companies and I have a lot of faith in them. I think they're doing a great job. But then I also invest into Bitcoin because I love the fact that there is no company. I love the fact that it's driven open source. Its value proposition is completely free market. Its development is, to a point, free market as well. Anyone can be a contributor to Bitcoin. I mean, how good is that? How good is that no one person can make a decision? We've seen what happens with coins when one person makes a decision. I'm sure you guys know exactly who I'm talking about. And I would argue that the outcomes are not good. Number 3, old technology. This is an interesting one, guys. When people in this industry, and I've even spoken to people who have been in this for a while, think that Bitcoin's technology is old and redundant. The actual truth of the fact is it's a complete opposite. So where I think this point comes from is when Bitcoin, just because Bitcoin has slower confirmation times. So because Bitcoin's confirmation time is every 10 minutes, and there has been long waiting times with a lot of transactions sitting in the mempool back in like 2017 when there was a lot of people getting involved, people assume that one design constraint, if you could call it, well, it is a constraint in Bitcoin's protocol, therefore correlates to old technology. Bitcoin, actually, the truth is, has the best technology out of any blockchain in the world. That's why so many blockchains fork it or use the Bitcoin improvement proposals on their own chains. Now, other protocols have different value propositions. Ethereum has a different value proposition, right? But Ethereum is now running into a lot of issues in regards to the size of its blockchain. The size of the blockchain is now over 1 terabyte, so it's becoming increasingly difficult to run your own node. There are also issues like hierarchical determination, which still doesn't exist on Ethereum, that Bitcoin has. Bitcoin attracts the smartest developers in the world, and many developers who are working on Bitcoin are fully funded through either buying Bitcoin when it was very early or through working for companies that are extremely well funded. A good example would be Blockstream. So you have these developers who essentially can work on Bitcoin as a passion project. And because you have a small pool of extremely talented developers doing this, you have the ability for these developers to have kind of the creative freedom to use all of their mental power to work on this. You also have a project that's been open source for 10 years. I mean, just go and look into Bitcoin improvement proposals on GitHub and you will see just the level of innovation and talent and developer mind share, as Trace Mayer says, that goes into Bitcoin. Bitcoin has the best technology. It's got the Lightning Network. I know the Lightning Network was developed by other people, but it's being implemented on Bitcoin and massively innovated, mind you, since it's come onto Bitcoin, constantly being innovated. So Bitcoin definitely doesn't have old technology. Bitcoin is like numero uno in terms of blockchain technology. I mean, 10 years long, it's never had any major issues to its chain whatsoever. It's also the worth the most, yada yada. I could just go on and on. Number 4, high transaction fees. So that is incorrect. Transaction fees on Bitcoin now are between 10 to 15 cents, depending on the time that you want to send it. And if you use the Lightning Network, it's free. It's essentially free. Technically not, but essentially it is free. It's like 0.00001 of a cent. And then number 5, cult-like community. I would say that a lot of people are quite ideologically driven towards Bitcoin. A lot of maximalists, a lot of smart people, I have noticed, are too maximalist. They are too ideologically driven, and that's where they'll get stuck. There's nothing wrong with having some ideology, some philosophy, but if you let it cloud your rational judgment, you're going to get wrecked. You're going to get wrecked, and you're going to lose money. I've seen it. I've seen people that are just totally maximalist, won't buy any other coins, are essentially spewing incorrect statements that is counter to what the data says. And that's the thing, you have to be careful with ideology. Don't let it cloud your rational judgment. Always be objective, even on yourself. I think that's the best way to go. Another one here, great advice. Thank you, mate. Where are the walking ATM? You're the nan, Bo. Love the vids. Thanks, Matt. Biggest problem is exchanges trading cryptocurrencies that do not have to manipulate the prices down. That is a video by itself. Even CoinSpot is guilty of it with Theta. Again, I'm struggling to see. Am I missing something? I don't know if I'm missing something, but I just have not seen convincing information other than just pure speculation that prices are being manipulated outside of pump and dump coins. That is the one clear example where single coins have been manipulated. You are discrediting Bitcoin and blockchain by promoting the Lightning Network. Yeah, okay, Lightning Network is not Bitcoin. No one says Lightning Network is Bitcoin. Lightning Network is, as the name implies, it is a network. It is a layer 2. It is a layer 2 protocol that sits over the top of the Bitcoin blockchain that allows for feeless instant payments. Bitcoin goes into a smart contract on Lightning, right? And then the way it works is the Lightning payment is just Lightning Bitcoin. And there are places now that you can pull the Bitcoin back out of the smart contract. Like without this, this is the solution to Bitcoin's scaling problem. So I don't think it's discrediting Bitcoin at all. I think that is coming from an ideologically driven point about block sizes, and yeah. So I think Lightning Network is killing it. And I think a lot of people would agree. Next one down, OMG and ADA, my two favorite and promising altcoins. Amigo has heavy hitters on the team. Yeah, they do. Gavin Wood, whom invented Solidity, Ethereum's programming language. Joseph Poon, whom invented the Lightning Network. Yes, the same Lightning Network with all the hype Bitcoin has. Yeah, that's exactly right. Joseph Poon did. Vitalik Buterin, inventor of Ethereum. Amis, the huge payment company in Southeast Asia, and more. Amigo has heavy hitters on the team. Yes, it does. Next one from Adam. Viva Bitcoin. On another note, I recently heard the recommendation of owning at least 32 Ethereum in preparation for the next bull run. They suggested there would be benefits from staking as there would be no more ETH paid to miners. What are your thoughts on this, my crypto brother? Yeah, actually, that's a really interesting point Adam brought up. So, word on the street is, I don't think this has been confirmed yet, but word on the street is that you're going to need at least 32 Ethereum to run your own staking node, to be a validator. So essentially what that means at a high level is to be one of the key validators for blocks on Ethereum, you'll need kind of like a monetary collateral of 32 Ethereum to be that node. You can have more than that. You can have more than 32 Ethereum, and the more you have, essentially, the greater your rewards are. And the reason that Ethereum is staked, that requirement is staked, is to essentially have some collateral. I guess it's analogous to a Bitcoin miner. To actually mine, you have to put up collateral. You have to go and buy mining equipment. So with Ethereum, it's going to be very similar, but for staking. Now, this staking, it is just that. It is staking if there is malicious behavior on the part of the validator, then that stake can be slashed. The network can take it. But what I do believe is what will happen in the future with Ethereum and other protocols as well is you'll be able to stake with less than that, but you will stake in like a pool. So there'll be a pool that'll be running its own validator nodes, and then you can stake your Ethereum with that pool, and then they'll give you maybe, I don't know, like 20% of the rewards or something like that. So there'll be these staking pools, just like mining pools. In fact, there is staking pools now set up, but these will become far more popular in the future because people can essentially earn a return on their investment. They can earn additional returns on their investment on top of potential appreciation if the market goes up. So what Adam is saying is he's essentially saying, is 32 Ethereum required to be a validator? I've heard that number thrown around. I don't know if that's confirmed exactly. I don't know if that's 100% true, but those are the numbers I have heard. But it's not really going to matter whether it's the next bull run or not. It's just a matter of when Ethereum actually implements staking. Well, actually implements staking it. And apparently it's going to happen this year. I don't know. It's massively technical work, so I think potentially it could even be pushed out longer than that. Next one down. Thanks, Bo. All great reasons to own Bitcoin for sure. My favorite is just giving them some. Love sharing that first experience with people. Keep a little slush wallet, so when someone comments on my random shirt or hat, then give them $5 of Bitcoin if they don't have any yet. One step gets all 5 reasons out of the way. Plant those seeds. Yeah, man, absolutely. That's what I do as well. You just have a little slush wallet where you can just use. You can give someone some, or because it's such a good experience when you get someone to, when you're trying to explain Bitcoin. Sometimes I just say, look, just download a wallet, set it up, record your private seed, and I'll just send them some Bitcoin. And then it's like, what? Oh, okay. And they're like, oh, so it's worth this much. You know, what? How come it's changing? And then I explain to them the fact that it's floated on a free market and it could go up and down in value. And it's a really cool experience for these people to go through that the first time. And I find it's far more impactful on them than actually trying to explain Bitcoin to them and all the technologies. Get them to download a wallet, send them a little bit of Bitcoin, just a couple of dollars, and I find they're mostly hooked after that. So guys, that's it for the video. I think I'm going to pull up there. We've done half an hour. That went really, really quick. Thanks for tuning in. I hope you enjoyed it. If you like this video, let me know. I'm going to call this episode 1. If you think this is a good content, if you got some value out of it, let me know, and I'll do more in the future. Maybe every couple of weeks I'll do one. If you're new to the channel, please subscribe. We're a small channel, but we really appreciate anyone new that comes on board. Leave a like if you like the video. The likes really help YouTube. Recommend my content to more people to help us grow. Leave a comment. Tell me what you thought. And don't forget to check out our new course, The Ultimate Guide to Cryptocurrency Trends in 2019. You can check that out on our website. There'll be a link down in the description. So guys, that's it from me. Hope you have a great weekend. Thanks again for tuning in, and I'll catch you in the next one. Cheers.